All right, welcome to the daily market recap for Thursday, September 11th. In this video, we'll be taking a look at the action today of the indexes, liquid leaders, industry ETFs, then end the video with long and short setups like we do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to my channel. And if you want my market takes throughout the trading day, along with the live stream at the open and the trades that I personally take, you can sign up for the Market Pulse Discord using the link below. Getting into it, the market is getting very hot right now. NASDAQ, new all-time closing high, new all-time high as well. Little gap up today, closed nicely in the upper half of the range, up 0.6%. The S&P 500, even stronger with a larger gap up, closed right near the high today, up 0.8%, also at an all-time high. We do start to see price accelerating to the upside, which when you start to accelerate, you'll also get acceleration on the other side of it. But as long as we're above the 5-day moving average, we want to play with the trend, and the trend is higher right now. The growth stocks are the Russell 2000 with IWO, another gap up, open on the low, close right on the high of the day. So you can see the kind of rotation between mega cap tech stocks to the rest of the market. And mega cap tech stocks are still strong themselves, but it's really the rest of the market that's really coming alive at this point. ARKK, we had an ugly candle yesterday on kind of equal volume where we closed back under the 5-day moving average, right at the 20-day, right at the support gap. And the best thing you can do after an ugly close down is a gap up and an ignite candle, which is exactly what ARKK had. We gapped up, opened on the low, closed on the high. Really looks like we're breaking out of this multi-week pivot or multi-week base where we had higher lows into the 50-day moving average, and now looks really ready to run even higher. IBIT as a way to track Bitcoin, another day of relative strength, rallying back up to the 50-day moving average. Nice to see that we've put in this low kind of on a breakout retest if you look back overall in the structure. There is a little bit of like concern here, at least on my end, where we attempted to break to new highs and then immediately reverse to the downside. Once we get over the 50-day, can start to build some higher lows, then we can talk about this being a double bottom base. Right now, the momentum's not with crypto. There's a lot of strong crypto charts out there, but Bitcoin itself isn't the strongest. And that's saying something because it's not really doing much wrong. It's just kind of putting in a test of the 50-day. But the rest of the market is so hot right now. Next, we have the liquid leaders. We'll sort this by a price percent change today. First off, I did add Alibaba. This is breaking out of a 3.5-year base. It's the liquid leader in China. You've seen my videos. You know I've been pounding my fist on China about how this is set up to break out and have a lasting breakout. We've covered this for multiple weeks, and now we are seeing real rotation into Chinese stocks with Alibaba taking the reins here. So I did kick out SoFi. SoFi is not doing anything wrong. Really quick check at that chart. We had a little gap up today, close over the 5-day moving average. It's kind of insane that this is the stock that I'd have to take off the list. Just shows you the strength of the market right now. And I wanted to get one of these stocks in the emerging theme, which is the Chinese equity. BE, another gap up, open on the low, close on the high. This is really getting extended in the short term. This is one of the stocks that I'll be watching for a parabolic short if we get another gap up and another strong close. But if you're in this stock, what a monster. Best performing stock in the market. Really not much more you can ask for if you're long the name. ALAB, higher highs, higher lows, kind of a consolidation candle here. If this comes back to the 5-day or even the 10-day moving average, it would still be perfectly healthy action overall. I kind of don't want to see it accelerate to the upside because that's just another warning sign of everything's going parabolic. And then at the end of this parabolic move, there's going to be a lot of damage to deal with. But again, until we get that kind of blow off type moves, you want to be playing on the long side. APP, higher highs, higher lows, new all-time high close. It's kind of tested the support gap and held there. Still plenty of room to the 5-day moving average. Google, similar action, bounce off the 5-day, new all-time high. Awesome action there. Robinhood, a little bit of weakness and a little bit of weakness after hours. So I might put SoFi back in, take Robinhood out, kind of musical chairs with the leaders here. The point is they're all acting pretty well. This is above the 5-day moving average, just kind of pulling into the closing price after that S&P 500 inclusion. AVGO, huge day yesterday, up 9.8%. A little give back today, down 2.7%, but on very low volume. Close above the 5-day moving average on low volume. Uh, if you've watched my videos, I don't think is a huge deal unless we follow through to the downside. Really, this is just consolidation after a huge move up yesterday. CLS down 2.8% today, bounced at the support gap and the 5-day moving average, really just tightening up after the gap up on September 5th. My expectation is a little quick undercut and reclaim of the 5-day, and then this can rally back into new highs. And then CRDO added this yesterday to the leaders list, not personal stocks that I own, just the leaders list. Gap up, close, open on the high, close on the low. A little bit of give back there, which is completely fine. Looking for a pullback into the gap zone. Maybe the 10-day moving average can catch up to that point. Getting into the industry ETFs, first home builders. We were on watch. I was really hoping that this would pull back into the 20-day moving average and gap zone so I could get a entry in like NAIL or some other home builders. Unfortunately, the market's too strong. We gap up, open on the low, close near the high, reclaiming the 10-day and the 5-day moving averages. And really just another sign that interest rates will be coming down. KWEB, Chinese internet ETF, breaking out of this 3.5-year base. I'll put it on the weekly chart. It does not get more beautiful than this. Like picture perfect base, breaking out on volume with liquid leaders, Alibaba and other Chinese equities breaking out. I don't think that this is going to be a quick move to the upside. We might get a quick move and then a check back. I wouldn't be surprised if we do get a retest of this breakout point. But just phenomenal action out of the Chinese equities. XRT, retail ETF, lots of these ETFs. If I kind of zoom out here, let me just do this. 11 out of 25, so 44% of the ETFs that I track made 52-week highs today. So it's not just 7 stocks participating in the market, it's every stock, every theme, which is kind of a warning sign that once you get these parabolic moves, once you get acceleration in the indexes, keep playing to the upside, keep dancing while the music's playing, but be ready for the reversals because from parabolic moves up, you tend to get some pretty parabolic moves lower. Speaking of parabolic moves, let's go back to some of these ETFs. Gold miners, GDX, frozen rope action over the 5-day moving average. This doesn't typically resolve with a normal pullback. So another gap up, strong close, and then a gap up on Monday. I would be looking for potentially a parabolic short there. But it still has room to the upside. Positioning is not crazy on gold miners or gold right now. So really just like an incredibly strong uptrend and hopefully not a sign for the inflation to come. A couple others, semiconductors, SMH, new all-time high. Cybersecurity acting great up the right side of this base. Wanted to cover a couple others. Where is it? TAN, a little bit of weakness here, while home builders and biotech. I should have covered biotech. Biotech acting phenomenally. My second largest position right now just continues to act really well here. The other kind of ETF that's tied to interest rates is solar, not participating lately. So maybe a warning sign, maybe just the fact that solar stocks have been in this massive downtrend for like 3.5 years. And to come out off the lows, you're going to see a lot of volatility. So I'll be watching the 20-day EMA and support gap area for just another higher low in the uptrend overall. I still think this is something that you want to buy on weakness instead of strength, given that the 200-day moving average is just starting to turn up here. And then MSOS we'll cover in the potential long setups. Also want to go over the NAAIM active investors exposure levels. We got an update on that. These numbers get updated at the end of the day on Wednesday. So the exposure levels at the end of the day on Wednesday get reflected here. And we did get an uptick from 81 to 86, but that's not at an overbought level. Usually my threshold is over 95%. You see a lot of false breakouts, a lot of volatility, upside and downside, which we got back in August, or not August, sorry. Yeah, August 20th. We still saw a lot of volatility there, but then we saw the exposure levels drop while the indexes were moving higher, while the leaders are acting well. And this is kind of the perfect storm for like a FOMO parabolic type move into a blow off top and then kind of weeks long of a correction. But again, we're not overbought yet. We're at 86%. There's still plenty of room to the upside. I think the highest number I've seen is like 116. So still plenty of room to the upside. And there's still some people that are bearish positioned wise. So kind of the recipe that you need for craziness in the market to continue. Getting into the long setups, we'll just wanted to cover Tesla before the long setup. Sorry, Tesla, nice breakout on volume today. Was super frustrating to trade if you were trying to trade it on strength. Even though I traded it on weakness off the 200-day moving average back at 330.50, it was obviously frustrating seeing the market like rip higher and then Tesla getting rejected once again at that the 360 level. It does finally feel like we've broken out of this base. We did so on volume, really strong action. So Tesla getting going, and then wanted to highlight Open Door, which is just really a reflection of what the market has been like lately, where momentum is the theme. This stock from 51 cents up to $10, up another, what was it, 78% today. They replaced their CEO, couple other either board member switches. I forget exactly what happened here, but this is a momentum market until we see breakdowns on heavy volume, the trend is to the upside, and we want to be cognizant of that. But there are a lot of parabolic moves getting going right now. Roblox today, little failure at that resistance gap. Because we have an overhead resistance gap, I never want to buy something like that on strength, always on weakness or a shakeout. Looking for a pullback into the low of the gap zone. The 20-day moving average would catch up as well. And then the stop would be the low of the pullback here. SOUN, kind of reminding me of the SMCI base, just a little bit, not exactly, but we see multiple higher lows. The 200-day, the 50-day, pretty close to each other. So this stock is not extended in the short term. We got the 20, the 10, the 5, all in the right order. Had a recent test of the 50-day moving average, a lower high, and now came back into the 10-day. Nice tight price action. Just looking for a break through today's high, break through 15. Stop would be tomorrow's low, whatever that would be, as the stop loss. Because we want to keep this tight, want to play the momentum, but don't want to give it any room to start working against us. So through 15 is the potential entry there. AFRM, this stock's been acting pretty poorly lately, but if we're going to get just a full on FOMO market, this is a really good spot to manage risk against. We had closed into the 20-day moving average and the support gap today. And if you zoom out, this is just a breakout retest. And whenever you get a pullback into the 20-day for the first time after making a new high, and that aligns with the support gap, it's a stock that I want to be watching for. So looking for an undercut of the support gap low, $80. Reclaim of that area would be the buy point. Stop would be 2 or 3% to keep the risk nice and tight there. CLS kind of covered this on the leaders list, just looking for an undercut and rally of the 5-day and the support gap. A gap and go could work if you want to play that momentum burst. I would rather play just a quick shakeout and then buy as strength comes back into the name, but I think you could buy this on strength. But again, we're like late stages of this uptrend. There's going to be a lot of momentum. The biggest momentum moves come at the end of these uptrends. Um, but don't be stubborn. Like if you buy the breakout and it starts working against you, get out, manage your risk. NIO, this is a Chinese name that I had on my watch list coming into yesterday, but then we had the gap down close under the 20-day EMA. With Alibaba's strength, We got back through the 20-day moving average, closed at the 5 and the 10-day, and feels like I can't get enough Chinese equity exposure. So putting this back on the radar. Perfect world, we get a little gap down to start the day, and then a red to green move as a potential entry. Stop would be either the low of the day or the 20-day moving average. Either way to manage your risk at like 3 or 4% there. PSTG got through the HVC yesterday, closed well today, up another, what was this, 1.6%. Now just looking for a retest of the HVC, the 5-day moving average, right at that 880 area, sorry, 8065 area. Stop would be the low of the gap zone. And this one, for a reminder, if you haven't seen the videos, double bottom base, really tight price action, massive move on volume, up 32% on earnings. This is the type of price action that you want to see out of the stocks you own. And I don't own it yet. AEO, we can do a quick comparison with ANF in a second here, but I'll be watching for a pullback into the HVC, into the 5-day moving average as a potential entry. Stop would be 2 or 3%. This one just starting to get the 200-day moving average to curl. So if this pullback happens over the next like couple days, that would be even better. But we know retail names like AEO can run and trend really nicely because it's happened before with Abercrombie. I covered this in yesterday's video, but just a reminder, Abercrombie had a initial gap up and then a secondary gap up with the 200-day moving average starting to slope up. We had a little bit of weakness under the HVC after a 31% move, very similar to AEO. We popped over the HVC with a strong close and then had 2 days coming back into the HVC and the 5-day moving average. That was really the entry. And from there, we trended higher and higher and higher. Went from $30 up to, I mean, up to 120 without losing the 50-day moving average. Just incredible, incredible strength. Didn't even close under the 20-day for more than 2 days, I think, the entire move. So just because it's a clothing brand and not AI related does not mean that this can't trend and can't trend in a smooth manner. Elf was another beautiful example of that back in 2022. Got going with a earnings gap up, and then just trended over the 50-day moving average for hundreds of percent. Now we kind of put in the low, rallied back up. We're over 100% off the lows in April. Nice little shakeout under the 50-day moving average on earnings. When you get a gap down on earnings and then you get an immediate price reverse back to highs instead of follow through to the downside, that's a stock that you want to keep on your radar. We had a little pullback under the moving averages, big expansion bar on the 27th, rallied up into a resistance gap. Now just looking for a pullback into the support gap low at 130.30. Play that versus the 20-day EMA. Shark Ninja is next. My favorite retail product. I've got their blender, got their coffee maker, got their vacuum. Um, they basically do everything pretty well, and we have a really really massive. I wouldn't really consider this a double bottom base, but we've been basing out for quite some time, rallied into highs, kind of had this malfunction bar on earnings. But instead of following through to the downside, we've just gone sideways, let the 50-day moving average catch up. And today we had an inside candle closing on the low of the day, which you can interpret as relative weakness, completely fair. But when you get an ugly close, looking for a gap up, opening range break through the past 2 days highs as an entry, then the stop would be today's low and the 50-day moving average on this one. UUUU, just looking for a pullback into the 10-day moving average and gap zone just under $12. Really strong, powerful stock. Good example of a malfunction bar that resolves higher, quickly can make even stronger moves. So went from 10 up to $13. Now just looking for a pullback into that 10-day. IBP, one of the kind of like home builders, home construction stocks that I'm watching for, didn't pull back as much as some of the others. Just looking for a test of the support gap and the 20-day moving average. Stop would be 2 or 3% on this one. AAOI, love the action out of this one yesterday, up, what was it, 16, 17%. Pretty tight close today, did have a very small gap down. But if you zoom out on this, you got the 200-day, the 50-day, 5, 10, 20, all right on top of each other. So it's a stock that's not extended, very similar to Tesla, but is much higher ADR, 9.7%. Um, so a name that when it moves, it can really, really move. So you don't have to position size like incredibly high. So low volume, red candle close over a 5-day EMA after a big expansion bar. Just looking for a gap up, opening range break as an entry. Stop would be today's low. MSOS, I tried this back in here. This is the cannabis ETF. Closed under the 20-day moving average. I didn't trade this rally. I thought it was tradable, but now we've had a reversal and then kind of two ugly closes well below the 20-day. So any swing trader that's using the 20-day is out on this name. It's out on the theme. The theme hasn't been working, but it's very news driven. So I'm wondering if this is a shakeout before another leg higher. And really, like 50 days in an uptrend, 200 days flattening out. So you should expect volatility like that. It got pretty extended in the short term, moving from $2 up to $6. Now just looking for a unfilled gap up. So a gap up, opening range break as the entry. Stop would be today's low. Same idea with METC. This one, higher low, higher low, higher low, higher low, but ugly close under the 20-day EMA. Gap up, opening range break, buyable versus today's low. Keep risk nice and tight. And then finally, Pony. I did buy this today, and even though I'm slightly red on the position, I held it overnight just because it is a Chinese equity stock. Really want to build a lot of exposure in that emerging theme. And it has the ability to make really massive moves from $4 up to $20, then spent the rest of this year just basing higher low, higher low, higher low, getting up into this range. So looking for just a breakthrough yesterday's pivot. So we had a little uppercut and fail of the previous highs. You could play it on a shakeout to the 5-day moving average, shakeout of yesterday's low, or on strength right back through that 1550 area as an entry. And on the short side, we'll go most liquid to least liquid. MSTR continues to be just maybe the weakest growth stock in the market, which I love because I've got a short position. I'm in MSTZ right now from August either 12th or the 13th. Incredible relative weakness. Even while Bitcoin is back to the 50-day moving average, this is just chopping sideways, no bid on it. And eventually, if Bitcoin does break to the upside, this will catch some type of bid because you can see in the support gap, it's been supported 7 or so times. So really, I expect to move higher before another leg lower just because the market's so strong. Bitcoin's been strong recently. Watching for a rally back through the 10-day, up through the resistance gap, and a just a lower high here to add to the position or start a new short on MSTR versus the high from yesterday. BE getting extended in the short term. Still think we'll probably have perfect scenario here. Another gap up, another huge candle like we saw the past 2 days. And then on Monday, we get a third gap up, or sorry, a fourth gap up. And then a loss of VWAP would be the short entry. Still watching it for that tomorrow, but I won't be sizing like nearly as much if we get another gap up and go leading into Monday. We are pretty extended here, but it's been the strongest stock in the market. LITE, very similar. We have a red candle close on low volume, so I really think we'll probably get another gap up and big extension candle to the upside for like a blow off type move. Um, but it's on the radar. If we can like gap down and then take out today's low, then you can argue that this is a potential top here. Joby, more relative weakness today. It was actually up today, so I shouldn't say that. It was up 3%, but we did get the uppercut and fail of the resistance gap like we were looking for. This was on the short watch list in yesterday's video. Just another test of that area versus yesterday's high is a potential short. Or if the market seems to crack, I don't see how the market can crack on Friday. It's I more expected like Monday or Tuesday. But through today's low could be another spot. I would just rather like short an uppercut and failure though. GFTV, very weak name, just lower highs, lower highs, lower highs. Close at the low of the day. This one, just through today's low, is a potential short. Stop would be the 20-day EMA. And then ZEPP, today, undercut yesterday's low, the 5-day moving average, the 10-day, and the support gap. Responded at that area and closed well. So I would lean on the side of this having another day, two, maybe even more to the upside. But eventually, when you cracked the downside, and we have this 7 days of kind of sideways trading, we have enough time here where people are trapped or would be trapped at these higher prices if we break to the downside, just like we saw with NEGG. But we don't have to do that. We've consolidated just like we consolidated here. And from here, we resolved to the upside with 18%, 7%, and 10%. So not out of the expectations for this to go even higher. NEGG topped out at 120, 130, something like that. So I wouldn't be surprised if this does have a move higher. I do not want to short this one on strength. This I would want to short on weakness only. And you could even consider buying this as just like a pure momentum play, pure performance booster if we do get like a gap up and we take out the resistance gap here. So that's going to be the market recap for Thursday, September 11th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with a live stream at the open and the stocks that I personally trade, you can sign up for the Market Pulse Discord using the link below. Have a great rest of your night, and I'll see you guys in Saturday's video.